Stablecoins are not growing loudly. There are no dramatic price spikes, no viral headlines. Yet in the most practical layers of finance, payments and cross-border transfers, they are quietly becoming essential infrastructure. If Bitcoin and Ethereum are wagers on the future, stablecoins are closer to money that works today. By being pegged to real-world assets such as the US dollar or short-term government securities, they remove volatility from everyday transactions. That stability turns directly into utility. Nowhere is this clearer than in international remittances. Traditional bank transfers often take days and can charge fees approaching 10%. Stablecoins move value in minutes at a fraction of the cost. As a result, in many emerging and developing economies, stablecoins already function as a digital form of the dollar. They are frequently more reliable than local currencies and accessible even to those without bank accounts. This is where the deeper debate begins. Who controls the future of the digital dollar? The US dollar remains the world's reserve currency, but cash is declining, and finance is rapidly shifting toward mobile platforms and blockchains. Into this transition stepped dollar-backed stablecoins, created not by governments, but by private actors responding to market demand. That shift has triggered concern among central banks. And it explains the rise of CBDCs, or central bank digital currencies. CBDCs are official digital currencies issued and managed by central banks. They are designed to preserve monetary sovereignty, enable oversight of money flows, and maintain control over the financial system. Stablecoins, by contrast, are issued by private entities and circulate freely across borders on public blockchains. They prioritize speed and openness, but operate largely beyond direct state control. What is unfolding, then, is not merely a contest of technologies. It is a subtle yet fundamental struggle between money engineered by governments and money adopted by the market. What makes this moment especially significant is timing. While CBDCs remain largely in pilot programs and policy discussions, stablecoins are already in everyday use. Not because they were mandated, but because they solved real problems first. In the end, one question remains unresolved. Will the future digital monetary system be shaped by government design or by standards that markets choose organically? Stablecoins are growing quietly because they are already answering that question, not in theory, but in practice.